Thanks for staying with us. We now have more excerpts from our exclusive interview with Suren Madanayaka. Well, there have been a few lessons to be learned from global stock markets, Raj Rajaratnam's sentencing being the most recent. Where insider trading is concerned, are we just letting it happen? Are the regulators just turning a blind eye and just letting everything happen and letting the market do what it can and should do?
If you look at price bands are brought in, but it doesn't apply to a lot of companies. Why doesn't it apply? I have no answer to that. It's a very controversial subject that I'm talking about, but I feel if you need all the investors to be in place, the retail investor is absolutely necessary for a market, and by doing these punting and running stocks, it is just going to get the retail investor out, because he once burnt, they will never come back.
Suren, what about the IPO frenzy? At the beginning of this year, we saw a whole host of IPOs coming out into the market, and many of them opening at multiples of their issue price. But right now, whatever IPO that opens is struggling to keep itself afloat.
I would say Sri Lanka is more or less immune to quite a lot of the outside world, I would say, when it comes to the stock market. I think there were too many IPOs that came in one go, and they were very large IPOs as well. And people are expecting 100% returns on any of these things. So I think that's why there were a lot of investors who went in without even knowing the company or companies that came out. So what I see is the returns that you should not go for very high return expectations, and look at the good stocks to invest. It doesn't have to be an IPO. There are enough stocks which are trading way below the values that it should be.
How do you view the state's presence in a rather big way, the fact that they are playing in the share market? For instance, the EPF says that 7% of its assets, our assets, the public assets, have been invested in equities. Now, do you think this is reasonable?
I believe it's a good thing that the state is investing in that. It should have a diverse portfolio of investments in their own sense. The investments done by the EPF should not go in. It has to be good shares that they should go in for.
What about the conflict of interest where, say, state institutions dabble in the stock market? For example, some say there are times when buy and sell orders actually border on market manipulation, given the government's PR strategy in place at that time.
You could certainly see conflict of interest in certain cases, yes. But if you go on fundamentally correct stocks, it doesn't have to be the case.
So how is the manufacturing industry faring these days? Not forgetting, of course, that there is almost a global recession in the offing, and you are working in a global marketplace. How do all these things affect your industry?
Savitri, we were looking at increasing our turnover, 50% of our turnover to be in exports. We were going on the correct track. By 2008, we had reached 30% of our turnover in exports. But unfortunately, with the global downturn, it has come down because the demand from those countries have come down. We are now at about 12 to 15%. But I still feel that we have a good opportunity from this country to export. And we are, as ACL, we are looking at least 20% this year from exports. The commodity prices, again, I feel most of these are manipulated. Copper shouldn't be at these prices. Certainly we saw a correction to a certain extent. Copper going from 9,000 to 6,700 within a month shows that it's not purely on supply and demand. So there's a lot of hedge funds manipulating.
These are some things that we ourselves will not be able to do, but then we have to look at these scenarios and work with the rest of the market.
What about the manufacturing industry, Suren? How is it faring these days?
Well, we can control it to a large extent. If you look at the import bills, apart from oil and the necessary necessary things, there's certainly been a commodity price increase. That could be one reason for the import bills being high. But then we have also gone in for non-essential items. That's I think the large increase has come from non-essential items. So at this time, I think we should try to control ourselves to a certain level, and if it's possible, buy locally produced goods, and where you don't need to send our hard-earned dollars outside.
That was Suren Madanayaka. The Voice of Business is coming up, but before that, here are some messages from our sponsors.
A new era has begun. Finally, a smartphone that sees the world as we do. LG Optimus 3D, the world's first full 3D smartphone with dual core, dual channel, dual memory. A super smartphone that outmuscles the rest in speed and performance. Life's good when your phone isn't just smart, it's genius. LG Optimus 3D.
If you're looking for a leasing company to make your wheels go round, with fast, friendly and hassle-free service, together with flexibility and the best interest rates in town, let us show you how we can make your world go round. People's Leasing Company. We're the #1 in leasing because pleasing people is our #1 priority.
Thank you for staying with Benchmark. In our final segment today, we focus on the performance of the Colombo Bourse and global equity markets. Here's Anushan Selvaraja.
Welcome to the Voice of Business. Joining me on the show this week is market analyst and LMD columnist Hasita Premaratne. Now, the all share price index continues to be among the best performers in the Asian region this year, though it has lost considerable value since its high of 7,863 points in February. In contrast, the Milanka price index has fallen by around 15% this year and underperformed against the broader market. My question to you, Hasita, is what has contributed to the Milanka's aberrant performance?
Yeah, I think if you look at the ASPI's kind of movements, primarily the all share price index has been boosted by some of the speculative trading stocks, where we found that some of the smaller counters, illiquid type of counters which can be easily manipulated, has gone through some of the absurd price levels. So that is one of the reasons why we see that the ASPI is at a higher level compared to the Milanka index. So the question comes in, which index is more realistic to look at and compare with the global market? I think at this point of time, if you really look at it, it is the Milanka price index which is comparable, and the type of fall that Milanka index has seen compares reasonably well with the global markets as well. Also, the price earnings ratios, if you compare with the global markets, the Milanka price index stands at about 12.5, 13 time range on the trailing PE of the last 12 months. When you compare that with the regional markets, I think with our growth potential, still it looks reasonable with that kind of drop. But having said that, I think what is important to understand is that the Milanka stocks are still the majority of the blue chips, and they are still fundamentally strong. So the fundamentals of those counters have not significantly changed, but the value of the stock, the price has come down significantly, with the price earnings multiples falling down due to the reduction in the share price. So in that context, one can always argue that looking at the Milanka stocks, when the markets pick up, these fundamentally sound counters should take a better wicket to move on.
Now, financial markets around the world took quite a battering in September, with most equity indices, commodity prices and bond markets being dealt heavy blows. How have investors coped with this, and how has it affected the US and Eurozone economies?
When the Euro debt crisis was spreading and there was no clear direction as to how the political leadership will come out with a solution to this, I think the financial markets got extremely kind of heated up, and as a result there were strong reactions in the markets. maybe a little too aggressive or a little too early, but that's how the markets behave. So I think the markets did react very adversely at that point of time, and we saw severe decline in almost all the markets across the globe, whether it was a emerging market or whether it's a developed market or whether it's whether it's a US or Europe. So all markets got a severe beating. But having said that, I think there was recovery, and today the name of the game is all about volatility. So we've seen one day the markets coming down 2-3% globally, and then another day it comes up another 2-2.5%. But overall trend has been still negative in almost all the markets. But if you really focus on Europe alone, where the bigger problem is, I think if you take, for example, the Athens Stock Exchange, which is the Greece market, financial market, it has suffered quite significantly, and right now one of the worst performing markets in the world, which is fundamentally justified because they are almost in the verge of bankruptcy, if not bailed out by financial institutions like IMF. So I think this situation it will continue as long as the political leadership in Europe in particular does not provide a sufficient remedy or some kind of a package that would show that the situation would not aggravate and would not kind of go deep into the real economy and lead the global economy into kind of a recession mode. But still it's early to say whether we will get to a recession or whether there will be some kind of packages that will come and solve it in a better manner. But at this point of time, what we clearly see is that there is a lot of ambiguity, and that has resulted in heavy volatility in all global financial markets, commodity markets, as well as the bond markets.
When comparing global equity markets, how has the Eurozone performed in comparison to Asia?
Asia, if you take Chinese markets, I think we've seen a sizable drop. I think in the last 12 months, the Chinese market has dropped about 7.5%. As against obviously some of the other markets, like even in Bombay Stock Exchange, the Sensex has dropped about close to 10%. And we also see that some of the emerging markets such as Brazil, Russia, Indonesia have also fallen quite considerably, and they trade at very, I would say, attractive multiples, because if you take the price earnings ratio of the Russian market, it's at about 5 times, and if you take maybe a market like Brazil, it's standing at about 7.5-8 times. So I think the investors would look at these emerging markets as opportunities to grab sooner than later. But for that to happen, again, there has to be some level of conformity and some kind of confirmation from the political leadership that the global economy would not go into a deeper recession. Now, the other side of the story is that while even the emerging markets have fallen across the board, because most investors had to sell down, irrespective of whether the stock was attractive or the company was good or bad, they just had to go and sell down in the crisis situation to cover their margins and similar reasons. I think the Europe problem is very different. They have fundamental issues. Their selling was a must too. I think investors, most of them exited in some of the counters. And while the prices have been coming down, the earnings also have been gradually coming down, and if not, they should come down in the future. So as a result, I think the Eurozone markets may not see a significant improvement in the medium term. But having said that, in the emerging markets, the free fall that we've seen should be halted once the signals turn positive. And then there would be upside also, which will create the investors an opportunity to bargain hunt.
That was Hasitha Premaratne in conversation with Anushan Selvaraja. We hope you enjoyed our show. Do join us again next week. From the Benchmark team, have a great week.